Supply and demand trading is undoubtedly one of the most effective ways to perform technical analysis. Mastering supply and demand enables you to make exceptional trading decisions. In this video, I'll share comprehensive insights on supply and demand, empowering you to achieve remarkable results. Understanding supply and demand is crucial for your profitable technical analysis. I'll draw from my 3.5 years of trading experience to provide you with everything you need to know. Markets are driven by buying and selling activities. The primary reason markets fluctuate is due to traders exchanging assets. Notably, institutional traders play a significant role in these movements. There are two primary market participants: institutions like commercial banks, hedge funds, and central banks, plus we retail traders like you and me. However, retail traders account for only a small fraction of overall trading volume. Institutional traders are the ones who actually drive market movements. When institutional traders buy, markets tend to rise, and when they sell, markets tend to fall due to supply and demand dynamics. High demand for an asset leads to increased prices as buyers are willing to pay more. Let's illustrate these concepts with a simple example. Suppose I have 10 silver coins with no buyers. I would have to sell them at a low price to attract buyers. But if market conditions change and demand surges, people would be eager to buy, allowing me to increase the price as each coin is purchased and removed from the market. Price would rise further due to decreased supply. High demand coupled with low supply results in higher prices. Conversely, if someone introduces 100 more silver coins into the market, the increased supply might reduce demand, leading to the low prices. Well, this fundamental principle underlies the theory of supply and demand.
This is exactly pretty much what we see in the markets. In demand and supply areas are noted areas of consolidation before a big push to the downside or a big push to the upside, and while a supply zone is a premium price to sell at, whereas for the demand zone is a discounted price to buy from. Okay, and now how do we want to enter supply and demand? So when the market pulls down back to the demand, we want to buy from, and when the market pulls back up into the supply, this is where we want to sell at. Okay, just like that. Okay, so now as I have described that these are consolidating zones before the impulse, now what I really want to explain more, guys, is how to determine a valid supply or demand zone, right? So let's go. Supply and demand is visualized as zones on the chart, specifically the consolidating zones, right, or consolidations. But I'm about to show you how to determine the valid supply or demand zone. For instance, this is a bearish market, so we're going to see how to determine a valid supply zone. Now, most of you have been doing this, that to determine a supply zone is to look out for that last bullish candle before the bearish impulse, right? And that's wrong, as you can see according to this price action. I'm going to show you the only way to use the last up close candle before the bearish move, right? And let's get it. All right, so guys, this is the only way we determine the last up close candle before the bearish move as our supply zone or demand zone if the market is bullish, right? The only way to verify our up close candle before the down movement or the up movement if the market is bullish is by looking out for that particular candle sweeping out the most recent indecision candle's high, right? If the market is bearish, as this one is illustrated, you can see that this particular candle, this last bullish candle, swept this indecision candle's high, right? And that's the only way to verify this candle, the last up close candle before the bearish move. And if you don't do it that way, you will always get your supply, you will always mark your supply and demand levels wrongly, and most of the times you may be stopped out, right? So let's look at another example, how to find a supply zone without considering this methodology. And let's look at the example where our supply is still a bearish candle, right? All right, here we are. This was our example one, and it was about considering the last up close candle before the down move, and this is our example two, right? So here we can see that this our supply zone is still a bearish candle, right? It's still a bearish candle, though it's our supply zone, and let me explain how and why, because it's kind of the same knowledge we applied here, right? So as you can see here, that we had an up close candle, right? But it was an indecision candle. Remember, I told you earlier that determining our supply zone or demand zones is when we look at those consolidating markets, and an indecision candle is a consolidating form of price action on the lower time frame. And we can see that here, before this bearish candle printing, it swept out the indecision candle's high. And so this is how we do for our example 2. This is how we mark out our supply zone if we are on the bearish market. Today I've decided to use bearish examples because in most of my teachings I usually use bullish examples. So today I've decided to use bearish examples, right? So guys, and maybe if you like this in bullish examples, let me know in the comment section, and I'll do part 2 for this video using bullish examples. Okay, so this is example 2 of how to determine our supply zone, because here we consider 2 candles, because this candle is also still important because it's our zone of supply, because it's the only candle that signifies the end of bullishness and the start of bearishness. So it's still important in this level, right? So you can take a screenshot and just to keep it in your gallery. Maybe if you need it, you just go and check it out, right? So guys, let's go and look out for this form of price action on live market examples. Okay guys, here we are, and for this first example I'm going to use the methodology of the last up close candle before the bearish move, because this is as I told you earlier that I'm going to be using bearish example, right? So here we are on the chart, and the first thing you need to know for in order for this supply and demand concept to work for you effectively is by knowing how to mark structure, right? So as you can see here, that price came all the way from this way, breaking structure to the downside, violating lower lows and respecting lower highs, right? So as you can see right here, that we recently broke structure to the downside. As we have seen the price immediately breaking structure, it does a certain retracement, right? If you can see here, it broke structure, made a certain retracement, it broke structure again here, made a certain retracement, broke structure, made certain retracement, broke structure. So right, it's the same thing that we're expecting here. So let's zoom out. So the first thing we need to measure is the momentum. Where did momentum started from, right? As you can see from this candle, right? And if we zoom out again for this candle, it does not favor our supply zone because it didn't sweep that this recent candle is high, right? So it does not verify to be our supply zone. So we want to see that zone where we saw big bearish impulse, right? So this is our impulse right here. And where did it begin from? From this candle, right? And it is the last bullish candle before the down move. And I told you the only way it's valid is when it has taken liquidity from the most recent candle, right? And that candle should be an indecision candle. As you can see, how do we find indecision candles? It's when it has huge wicks both on the downside and on the upper side, right? So as you can see, this does qualify to be our supply zone. And from there, we mark it out just like this, okay? Just like that. So we are actually going to wait for price to tap into it, right? Okay, as we have seen, price has tapped in this zone, and you can see how price is trying to reject and it's not closing above or sweeping this high, meaning what? That area is a valid zone, right? So what you're going to do immediately after noticing that good price rejection, so let's see how price delivers. Okay, and so there we have our price, and boom. Okay, so this is example 1 for the last up close candle before the down move. So let's go and see how any last candle can be our supply zone. The other example, it may be a bearish example but still a supply zone. Okay, so let's go and check it out. All right, here we are for our example 2 on how you can determine your supply zone. You should know how to break down market structure in order for this concept to work for you effectively. As you can see down here, that we broke structure, had a simple retracement at a certain level, then we broke structure, broke this low right here, had a certain retracement, and broke structure again. I'll zoom out because this is the area we need, right? Okay, so we see our first leg began from this area here, this consolidation here, and as I told you guys that these zones are actually got from consolidating areas, right? As you can see here. So here we have a zone, then we had also we had this leg, then we had a correlation again. This is the second consolidation, and this is where we had our second impulse, right? So from seeing our second impulse, we could have used this as our supply area, but since we got this bearish candle that swept this up close candle is high, right? So I will use this whole area as my supply zone, right? I will use this whole area as my supply zone. But in some markets, we have huge areas here, just like this one, which affect our risk to reward ratio, right? So if I use that huge stop loss, it will affect my earnings, right? Because you can see that is a 1-to-1 target, right? But if I try to split that huge order block and try to use 50%, right, and place my stop loss above here and my take profit at that low, you see how I get a 1 to 3 RR. So let's see how price reacts at this area. Okay, so there we are, we tapped in. So let's see how price goes. Okay, there we go, there we have it. So guys, hopefully you have gained something from this video, and please endeavor to subscribe, hit that thumbs up in order for this video to be recommended to more people who need this knowledge. And I'll stop here for now. It's your boy GoDidFX. I sign out.